Happy Thursday. Today our machines are going through Tesla, P&G, ASML, Lam Research, CSX, NASDAQ and Baker Hughes earnings calls. Let's get started.
Tesla announced results on April 20, 2022. Interesting facts picked up from the call. And the Model 3, it's important for new factories to be focused on and have the least amount of complexity and variation, which is why Gigablow and Giga, Texas are focused on the Model Y, from the point in which you have a factory complete and you're making a small number of units to the point where it's producing high-quality vehicles in volume as 9 to 12 months from start of production. The body line for the structural pack, if you go structural pack and front and rear castings, the body shop size drops by over 60% relative to the standard way of making a car and everything else because we have the structural battery, the floor is the battery, we put seats on the battery and then we put that in their car. But, yeah, if we look past this year or next year into 2030, when we need 15 to 20 kilowatt hours of this stuff to get on the ground, stay on the growth trajectory we're on, we need everybody to do more in the lithium space than they currently are. Well, I think hopefully we should be able to ramp production faster than Shanghai because we have learned a lot and we've now been through we have basically veteran teams that have seen the 3 ramp, especially in multiple locations. We're working as quickly as we can to get to 80% of customers having access to a Tesla insurance product by the end of this year in the United States, at which point we'll give it our attention to expansion outside of the US. Here are some of the questions that were asked during the earnings call, to have a better idea of the discussions that were happening. The second question is how much of an impact will the production shutdown in Shanghai have in Q2? Next question is how does Tesla plan to secure raw materials required to scale to extreme size? Are you able to leverage learning from Shanghai or are the processes substantially different in the new factories? At what rate can lift the amount of sales increase the kilowatt hours per year? How quickly can raw material supply be built? Last, we used sentiment analysis to see how the analyst call sounded about specific topics. About sales, the sentiment was 50% positive. About prices, the sentiment was 60% negative. About costs, the sentiment was 71% negative. About growth, the sentiment was 66% positive.
A short look at how algorithms on Mark's Sign Algo simulate investing in Tesla identifies algorithm buy Sign 001 as the best algorithm for buy and hold, with a 326.07% return over the last 5 years while being 60% of the time in cash.
P&G announced results on April 20, 2022. Interesting facts picked up from the call. And as you say, there are a number of headwinds that we see as temporary China and the dynamics in China certainly being one of those significant dynamics which is impacting the broader haircare and skincare portfolio but also the broader impact on SK2 as it comes to the travel retail shutdown during the Corbett period and the impacts of China on the SK3 consumption with department stores being closed down and even some of the online business being hampered. One thing we haven't talked about except indirectly, is that we're still racing to catch up with demand in our largest market, the US, but we're not fully supplying the market's demand and all of those, hopefully over time or some of them at least offer even additional upside as they reverse themselves. We now expect freight and transportation costs to be a $400 million upper tax headwind in fiscal 22 for an exchange range has also moved further against us since our last guidance. The core portfolio has grown sales more than $3 billion over the past 5 years, profits more than $1 billion, significant shareholder value creation and 26 quarters of uninterrupted growth. Here are some of the questions that were asked during the earnings call, to have a better idea of the discussions that were happening. And any thoughts on China going forward with the continued lockdowns in April and how the business is positioned going forward. Can you give us a bit more granularity on some of the performance by product category there? Will there be a lot more incremental pricing? And are you seeing any differences in elasticity, maybe in some of those emerging markets? Last, we used sentiment analysis to see how the analyst call sounded about specific topics. About sales, the sentiment was 73% positive. About prices, the sentiment was 67% negative. About investments, the sentiment was 83% positive. About growth, the sentiment was 84% positive.
A short look at how algorithms on Mark's Sign Algo simulate investing in P&G identifies algorithm buy Sign 001 as the best algorithm for buy and hold, with a 33.15% return over the last 5 years while being 54% of the time in cash.
ASML announced results on April 20, 2022. Interesting facts picked up from the call. ASML and its supply chain partners are planning to actively add capacity to meet future customer demand as communicated during Investor Day last year. But at that time we talked about the current capacity ramp is expected to deliver an output capability of over 70 EUV033 systems and around 375 DPV systems by 2025. I mean, although we are not at the 600 units, as we mentioned, we will be able to increase more DPV shipments throughout this year and next year for the simple reason that we're basically pulling out all the stops in cycle time, reduction in process efficiency. We expect the second half of the year will be strong, with expected gross margins of around 54%, primarily driven by higher EV and DPV volume as well as improved margin from install-based business. So our customers are sharing with us much longer capacity improvement plans which actually extend way into, let's say 2024, 2025 time frame. Here are some of the questions that were asked during the earnings call, to have a better idea of the discussions that were happening. So with the updated capacity plans, are you looking to maybe increase that kind of buffer range, or how should we think about that? And related to that, as you think about how your increase of DUV capacity, where would you like that sort of waiting time to go back to? I just wondered if you could give us a sense of how many units have you booked so far, given the support you get from your 5 customers in the quarter? But in your view, can you give us some scenario as to what would need to happen for customers to really cut orders for next year, given the lead times, etc.? As you contemplate the capacity additions, can you kind of walk us through the impact to your cost structure, both COGS and OPEX? Do you expect the peers for other parts of the supply chain to increase as much? Last, we used sentiment analysis to see how the analyst call sounded about specific topics. About sales, the sentiment was 83% negative. About investments, the sentiment was 50% positive. About costs, the sentiment was 71% negative. About growth, the sentiment was 68% positive.
A short look at how algorithms on Mark's Sign Algo simulate investing in ASML identifies algorithm by Sign 001 as the best algorithm for buy and hold, with a 323.15% return over the last 5 years while being 56% of the time in cash.
Lam Research announced results on April 20, 2022. Interesting facts picked up from the call. If you look at what is the top priority for customers, and the top priority for Lam is to keep all of the install base, which now numbers something over 75,000 systems running every single day inside of those fabs, we're not going to compromise normal our customers on spare parts, for instance. While continued supply-related delays could potentially limit how much waste of fabrication equipment investment can be executed in 2022, our current WFE view is still in the $100 billion range. The memory segment was sequentially stronger in the March quarter with concentration of 66% of systems revenues. Our deferred revenue balance exiting the March quarter was over $2 billion as we ship systems to customers to accelerate tool installations but could not recognize this revenue within the quarter due to the lack of certain critical components. You talk about maintaining $100 billion for this year, but you talk about unconstrained WFE being above that. Here are some of the questions that were asked during the earnings call, to have a better idea of the discussions that were happening. And I guess as you think about maintaining the $100 billion WFE for the full calendar year, does that sort of imply that the $1 billion build-up you've seen in deferred revenue in December and March comes down and by $1 billion in the back half of the year? And should we be thinking about a pickup in Q3 and then a larger one in Q4? So what has prevented the equipment makers to pass along these higher costs if demand is so strong and so high? Do you have more confidence in that June quarter outlook versus how you felt about the prior guidance just given the deterioration in the broader environment? Last, we used sentiment analysis to see how the analyst call sounded about specific topics. About spending, the sentiment was 66% positive. About investments, the sentiment was 58% positive. About costs, the sentiment was 88% negative. About growth, the sentiment was 71% positive.
A short look at how algorithms on Mark's Sign Algo simulate investing in Lam Research identifies algorithm by Sign 001 as the best algorithm for buy and hold, with a 548.92% return over the last 5 years while being 56% of the time in cash.
CSX announced results on April 20, 2022. Interesting facts picked up from the call. Our timing is we're really shooting in towards the third quarter as we push the number of employees we have training right now if those qualify. And we continue to do our hiring of 30 to 40 every single week puts us in a good position at some point in the third quarter. It might be towards the tail end of the third quarter, and to Jim's point, we're continuing to hire for attrition. There is one thing and one thing only that we are short of that is hampering us from doing the job that we want to do and to get back to service levels where we were in 2019 and to get even better from that point on, as we need more people in the engineer and conductor rings. We invested 10 million more to onboard new train and engine employees, and we expect similar training costs next quarter as we continue to convert our strong new hire pipeline. Q3 is going to be a much better quarter for us. Here are some of the questions that were asked during the earnings call, to have a better idea of the discussions that were happening. And I guess to start with the follow-up on that last question, does the guidance still assume that volumes outpace GDP this year? So I guess, generally speaking, do you see a slowdown in consumer-driven freight, and is there enough upside potential in industrial commodity to offset that? Do I want it overseas, or would it be more appropriate to have it onshore closer to the consumers that are going to be buying the products? Last, we used sentiment analysis to see how the analyst call sounded about specific topics. About sales, the sentiment was 100% positive. About spending, the sentiment was 67% negative. About costs, the sentiment was 100% negative. About growth, the sentiment was 82% positive.
Nasdaq announced results on April 20, 2022. Interesting facts picked up from the call. The 5% increase in reported net revenue of $892 million is the net result of organic growth of 6%, including a 13% organic increase in the solution segments, partially offset by a 4% organic decrease in market services compared to a record net revenue high in the first quarter of 2021, and the contribution from Verifin as well as impact from divestitures partially offset by the negative impact from changes in FX rates moving to operating profit and margins. Our market share in U.S. equities saw year-over-year and sequential quarterly improvement, which resulted from an industry uptick in on-exchange trading as well as early success increasing the demand for some of our unique functionalities. Equity derivatives set a new quarterly net revenue high, up 6%, maintaining our market share in U.S. options in a very busy period while realizing improved capture. In our index business, we saw revenue growth of $20 million, or 20% versus the prior year period, driven principally by growth in ETP assets, which saw positive net flows of $75 million over the last 12 months, including meaningful inflows during the especially volatile first quarter itself. Finally, our corporate platform segment delivered record net revenue of $168 million in the first quarter, a 15% increase from the prior year period, driven primarily by our continued leadership in new listings across our U.S. and European markets, as well as growth in demand for our IR and ESG services. Here are some of the questions that were asked during the earnings call, to have a better idea of the discussions that were happening. Could you please give us an update on your ESG initiatives, maybe including some investment products and ESG reporting? So I guess to what extent will pricing competition start to impact that business over the next few quarters and years? And as you're deploying and moving forward with the AWS partnership, what are some of the key challenges that you're facing in deploying to the cloud? And then on crypto, could you please give us an update on your offerings? Last, we used sentiment analysis to see how the analyst call sounded about specific topics. About sales, the sentiment was 66% positive. About investments, the sentiment was 100% positive. About outlook, the sentiment was 67% negative. About growth, the sentiment was 89% positive.
A short look at how algorithms on Marks Sign Algo simulate investing in Nasdaq identifies algorithm buy Sign 001 as the best algorithm for buy and hold, with a 120.98% return over the last 5 years while being 59% of the time in cash.
Baker Hughes announced results on April 20, 2022. Interesting facts picked up from the call. Land and offshore operating income in the quarter was $221 million, down 14% sequentially. Operating margin rate was 8.9%, with margins declining 110 basis points sequentially, driven by lower volume, less favorable mix, and continued inflationary pressure in the chemicals business. Orders in the quarter were $3 billion, up $1.6 billion year-over-year. A new quarterly record for TPS equipment. Orders were up $1.5 billion year-over-year, driven by a significant award to provide an LNG system for the first phase of VG's Plaquemines LNG project in North America. With this revenue framework, we would expect our margins to increase by approximately 100 to 200 basis points sequentially for the full year 2022. We see an improving outlook across most major markets, which is partially tempered by global supply chain and geopolitical factors. But with the backlog that we're building on the back of potentially $8 to $9 billion of orders in TPS with some service tailwind, You saw service orders up in TPS 8% this quarter with strong returns and cash flow with a lot of operators. Given the current LNG price environment and the quickly changing dynamics, we believe that global LNG capacity will likely exceed 800 MTPA by the end of this decade to meet growing demand forecast. Here are some of the questions that were asked during the earnings call, to have a better idea of the discussions that were happening. Obviously, this is positive on the LNG front, but what does it ultimately mean for the energy transition? Imagine things are getting better, but do you foresee sufficient momentum there to propel above normal incrementals in 23 and continue to extend your margins beyond the 20% threshold? Do you mind going back to your prepared comments on the oil field services side and some of the changes you've made there? So if we think about the U.S. build-out of export capacity, are there any other kind of areas where you think there are bottlenecks that need to be freed up? So feeling good about the LNG outlook for the number of years? Last, we used sentiment analysis to see how the analyst calls sounded about specific topics. About prices, the sentiment was 63% negative. About outlook, the sentiment was 87% positive. About costs, the sentiment was 67% positive. About growth, the sentiment was 81% positive.
I hope you found today's updates helpful. If you want to learn how to build your own algorithms, you can check our free YouTube channel where we post hands-on courses about how to build them, or get the book that is looking at multiple types of investment algorithms, or feel free to check our small group customized lessons for something more personalized.